All right. Hey, everybody. I'm here today with Chris Blec. Did I say that right?
Yeah,
Okay.
Blec, sure.
Cool. So, Chris, I came across his newsletter. He's been doing just some really great content in the DeFi space. And I know this is a place where a lot of people have made and lost a lot of money over the past few months. And so, being like an old guy in the crypto space, coming from kind of a Bitcoin background, I wanted to bring Chris on to talk about how to survive. I think that's kind of the theme of your newsletter that you started, and just trying to help people navigate the space because it is so wild. I mean, it feels like there's some something that feels similar to the ICO boom of 2017, where people are there's a gold rush, but it feels to me like there may be some more sustainable stuff that's going to come out of this. So I don't know. How would you define the DeFi space to like your aunt or somebody who's not in the crypto space?
Thanks for having me, by the way.
Yeah.
The way I usually start explaining it is we have decentralized currency, that's Bitcoin. But for Bitcoin specifically, there are no very good and reliable and useful decentralized services, right? So most people, in order to get use out of their Bitcoin, and I know there's decentralized exchanges and stuff like that, but beyond the simple trading stuff, to get the most use out of your Bitcoin, you have to use centralized products. You have to use centralized exchanges or et cetera, merchants, that help you spend it.
Right.
So DeFi is supposed to be the decentralized services for the decentralized cryptocurrencies. That's the whole founding idea behind it. Whether or not it's there now is a different conversation. But decentralized finance, as far as I'm concerned, is decentralized financial services for both centralized and decentralized assets. And it's important to distinguish between DeFi is basically like the pipes, right? It's the pipes through which assets can run. And then there's decentralized and centralized tokens, like USDC is centralized, and that can flow through these decentralized pipes.
Mm-hmm.
So that's kind of how I try to start explaining what it is so people can start to wrap their heads around it.
Yeah, thanks for clarifying that because I've seen people define it different ways, and in a way it almost seems like a marketing term. But when you understand, like, yeah, it's the pipes behind making decentralized projects even more decentralized, it just makes sense, right? It's a fit because if we're using the PayPals and the Coinbases of the world, there's still an element of risk, counterparty risk and centralization and just some weird stuff that can happen there. What would you say is like the most exciting use case that you've seen actually work so far in the DeFi space?
So the way it started out was really pretty simple as opposed to what you see right now with DeFi. And you're right that DeFi is a marketing term. And most of the DeFi projects that you see out there, when you compare them to truly decentralized projects like Bitcoin, they don't even come close, right? And we all
Mm-hmm.
know like there's a spectrum between centralization and decentralization. There's no absolutes. Even Bitcoin's not an absolute as far as decentralization. But DeFi projects today that use that name, most of them, they kind of aren't too far off from some traditional Silicon Valley fintech, as far as like their level of centralization. Some are even worse because they're not regulated in the same ways and they don't have the same legal protections.
So meaning like it's a company with a group of people that like has control over the project and can manipulate it in whatever direction they want.
Oh yeah, in a lot of cases that is the case. But to get back to what you were asking about, what's the most exciting use case? So far, we've seen some really cool stuff come from projects like DAI, which was the most success. I'm not sure if you can call it the first, but it was the most successful decentralized stablecoin, right? Which showed that we can figure out ways to use this technology to create stablecoins without needing to trust, an entity like Center, which backs USDC, or Tether, right, to keep the money in the bank that we have to then trust humans to audit, et cetera, et cetera.
Right.
So to me, that's probably one of the most exciting experiments. And then beyond that, we've seen stuff like Compound and Aave and some of these other projects that have done what seems really simple, but it's actually pretty complex in this lending and borrowing mechanism that they enable, where you can lend your crypto, you can borrow other crypto, you can earn interest on what you lend, you pay interest on what you buy. And to me, it's not so interesting just because of the crypto use case, but it makes me start to think about what will we be able to do when we have more interesting tokenized assets, right? Like if
Mm.
we find a way to tokenize shares of Tesla, will you be able to lend your shares of Tesla, and then borrow USDC, as a stable coin, et cetera, et cetera. So there's all kinds of use cases. So to me, like the usages of these things are the most interesting parts are in the future, as opposed to what's happening right now.
Yeah, it does feel like we're just kicking off, and like we've seen that the first wave, which was, like Yam and all the what kind of in a way seemed like a Ponzi lending scheme, and I want to talk more about that. But it was interesting to see like what succeeded, what failed, what lessons were learned. And then I'm just super excited about this. I come from Bitcoin as like my background in crypto, but I'm not necessarily a Bitcoin maximalist in that, I love competition. I love innovation. And even if 99% of the shit fails, the 1% that does succeed can change the world, right? And can change the what is it, 4% of GDP that's eaten up by, financial middlemen, right? So to me, I just see a huge opportunity here, and it just seems like we're in kind of the foothills of just barely starting in this space. Would you say that's accurate?
Yeah, yeah, and I'm with you. I come from, when you said you're an old guy in the space, I don't know how old you are. Is 5 years old, because that's when I started messing around in the space. Not when I started buying and holding, but when I started messing around. So
Yeah.
I'm not rich, no. But I have that mentality where I came into Bitcoin initially for reasons of like financial liberty, and for self sovereignty, and having that libertarian mindset. So that's what first attracted me to decentralized finance on Ethereum, not because of what's happening right now, but because I saw a potential opportunity to sort of influence the path that it's going down, and to get people, even if people in the Ethereum space don't embrace the ideas that Bitcoin has put out there as far as liberty and self-sovereignty, and just having, own your keys, et cetera. Even if they don't end up embracing that fully, because Ethereum is a very centralized community when you
Hmm.
think about how it's run and stuff like that. But I think there's every single day, as people start to see what's possible with decentralized finance on Ethereum, they're also hearing voices that are saying, yeah, but imagine if it was actually decentralized. So I think there's going to be future versions of this, and I don't know if they're going to be on Ethereum or not. They might be elsewhere. But I think that, staying curious beyond just the bubble that Bitcoin is, not the financial bubble, but the thought bubble almost, right? Like there is sort of a bubble where people say Bitcoin only, never look outside. But for me, we need to have those services. We need to have decentralized services, or else Bitcoin is always going to have a very limited use.
Yeah, I
So
agree.
that's my attitude towards DeFi, and why I continue to try to push in the direction of changing the way they think over there.
I love it. So maybe we can do like a quick, I guess, history lesson of DeFi to date, because really, I mean, I think 2020 was the first year that we actually started to get kind of this new wave. I don't even know what to call it, but with like Compound and Yearn and all that, Uniswap and Dexes are rising. I mean, I think it was really only just a few years ago that Dex volume went from basically nothing to now having billions locked up and transacted on a daily basis. Like, how would you kind of, I guess, describe what's happened so far this year?
Well, this year was definitely the year when more eyeballs got on it. Last year was probably just as big as far as like percentage growth in
Hmm.
DeFi, but it was just smaller numbers. So we hit, I believe, $1 billion locked in DeFi early this year, before the hype,
Yeah.
and that's when I created a video that's on YouTube. It's like, what is DeFi or something like that, which highlighted the $1 billion locked. And then, you fast forward 6 months and it's like 10 or $13 billion. So it 10x this year. So that's why most eyeballs got on it this year. And
Yeah.
most of the interesting thing is, most of the people that came in, and the reason that they came in, was some the projects that you mentioned, like Yam and these other projects that saw these like thousands of percent APY, right? So the people that came in into the hype cycle this year were not very interested in the stuff that I was just talking about, as far as like the real usages of decentralized financial services. They were just here because they were aping into just what they want to get rich fast, right?
Yeah. Yeah, it's kind
So
of like what happened in the ICO boom of
yeah.
2017, right? A lot of people came in, a lot of people lost money, but there's a percentage of those people that actually stuck around and survived that bear trend, and now they're doing well.
Yeah, and it's the same thing here. The difference here between this and ICO, or the ICO idea, is that the ICO idea had nothing else behind it. It had no other function other than to fundraise.
Right.
And so the one thing that did come out of that was good was the idea of tokenization, right? And that's sort of, that was what brought it into the forefront of people's minds, and the idea of like, here's an ERC20 token, here's what it is and what it does. And now that idea is being reinvented in a way with DeFi. Tokens are being used in new ways. And we're figuring out we can tokenize tokens, and we can, we can create all of these different inception like vortexes you can go down.
Yeah.
Where you start to realize the true power of this technology and these ways of thinking. But yeah, the people that came in this year quickly left when the 1,000,000% APY went down to only 100%. But then it's the same thing with Bitcoin, right? Last time Bitcoin went up to 18,000, everybody and your grandma was in, and then, 6 months later, they're gone. But we did pick up 5-10% more people who actually understood. So with DeFi, I'm finding it's the same thing, but with the truly decentralized idea behind the DeFi services, not the nonsense that's taking advantage of the hype and stuff like that.
Yeah, absolutely, man. And I can't tell you, like, so over the past couple of months, I've been really just playing around with the dexes, Uniswap and Kyber and whatnot. And, I haven't gone heavy into the lending stuff and liquidity pools. I've just done, basic swaps. And it is just, once you do that and you see how easy it is to just exchange one token for another, you didn't have to get permission from Coinbase, you didn't have to do KYC with anybody. That to me is just like a moment
Right.
where it's like, oh my God, this is going to actually change everything. It's not going to be a smooth route. I don't know. Some governments are going to fight it. Some are going to embrace it. It seems like a rocky road ahead, but one thing that's clear to me is like, this is not going away. And if anything, this is where everything's headed. Do you feel the same way, or what are your thoughts on that?
Yeah. It's tech like this that once you take it out of the box, you can't put it back in,
Yeah.
So like, just like Bitcoin came out of the box, and there was, all these different applications for it. And by the time the government got around to looking at it, it was far too late to put it back in the box, right?
Yeah.
So this is kind of the same thing. Part of my concern about DeFi is, like I said before, most of the projects out there do have some level of centralization, and they could be affected by governments or regulators looking at it and trying to get them to comply.
Yeah.
One of the few that is not is Uniswap, and they're also one of the most useful. And Uniswap, like you mentioned, it's a decentralized token swapping tool, where you can swap ETH for any token, or any token for any token. In the beginning, it was like, okay, that's interesting because the token market wasn't that vibrant. But now you start to see, you have a token that represents the US dollar. You have this token that represents the British pound. You can start to do currency exchanges. You can start, like I said, if we tokenize equities, Tesla stock, Apple stock, you can start to do swaps there, and the real key with that kind of stuff is the centralized assets, right? So like the US dollar asset, the Tesla asset, these are regulated entities. So the pipes, Uniswap is the pipes. But to get your hands on some of these assets, you have to jump through hoops because of regulations and things like that.
Yeah. And then synthetic assets, I mean, that, it just takes it to a whole other level. And, looking at wrapped ETH and wrapped Bitcoin. And I don't know, man, the rabbit hole just goes so deep.
That's what they say about Ethereum is like, you can wrap anything you want. The
Yeah.
question is, can you make it trustless? Can you make it so that you don't have to trust a company or a human or somebody else to get the price through into the Ethereum
Yeah.
ecosystem? And most of the time the answer is no. And like if you did have shares of Tesla that were trading on Ethereum, you would have to figure out, where am I going to pull the price from? How can I trust that price? How do I know somebody can't manipulate it or change the feed, or stuff like that, and just totally screw everything up? So the real question, you can tokenize anything. You can tokenize your car, you can tokenize gold, you can tokenize anything you want. You can tokenize your thoughts, like why not, right? But the
Yeah.
question is, how does the value get set, and how do people come to agreement, and how do you reduce reliance on outside sources?
Yeah. And as we work through all those questions and problems, there's going to be a lot of people that lose a lot of money along the way. And that's why I was so intrigued by the angle that you're taking, where you say like surviving DeFi, right? Like, and that's what I tell people in our investor community is first learn to survive and then thrive. Like if you go in just swinging for the fences and you risk all your capital on some really high risk stuff, could you get lucky and make a life-changing amount of money quickly? Sure. But the odds are is you're going to lose it. And the more greedy and undisciplined you are, the more likely it is that you're going to lose everything. So I guess that's a good pivot point to just ask the question of like, what do you see as the biggest either mistakes that people make when they get into the space or risks that people just don't really consider up front?
A lot of the mistakes and the risks are not that different from like 2017 ICO days, where it's just they see something going up in price, they want in. So they just
Mm,
jump in, don't really think about the possible dangers. Um, People do make the assumption that if it's happening on Ethereum or on a blockchain, period, it must be decentralized, when those of us who've been around for a while know that's not the case at all, right?
yeah.
A blockchain is not inherently a decentralized thing. So people were buying ICO tokens, or not ICO tokens, but other cryptocurrencies on other blockchains with like one node, right? And they are thinking, oh, this is totally decentralized, when it's really absolutely not. So in DeFi, it's the same kind of thing, where people are they're driven by greed, and they want to get in on the hottest trend, but they don't stop to think about the risks that we've learned about over the past couple of years, that are existential to what's actually happening. For instance, some of these projects have what's called admin keys, and the admin key is basically one Ethereum account that has the ability to control the code, of the smart contract. So it, in the worst case scenario, it can swap out entire pieces of code. It can drain funds. It can do all sorts of things, and it's sometimes, like, worst case is centralized in one person's ledger nano. In
Yeah.
a better case, it's a multi-sig wallet that requires like 5 of 7 signatures or something like that. And in an even better case, maybe it's like a decentralized organization that controls the keys. But this is the kind of stuff you should know before you take $50,000 out of your bank account and shove it into a smart contract, right? You'd want to know, hey, can one person walk away with this money, right?
Yep.
But people don't know what they don't know. So with surviving DeFi and with other information I put out there, I've been trying to put it in plain English for people who are new to the space, so that they can start to just think about. My real goal is to let them know what they don't know, because as soon as
Yeah.
you start to know what you don't know, you start to realize, maybe I should be a little more concerned with what could go wrong here.
Yeah.
And then you need to have that adversarial thinking in this space, or you will get crushed.
So true, man. I mean, to think about like how many people just get caught up in the marketing aspect of like, oh man, this decentralized project is going to change the world and, lights and action and all this fancy shit. And then it's like, oh, wait, you mean like one dude can just do a rug pull or like he has one code that basically kind of crushes all the other shit that's on your white paper, right? Like
What white paper, man? There's no white papers anymore. I
yeah.
forgot. When I see a white paper, my eyes light up. I'm like, wow, somebody remembers the past of when we used to do white papers.
Yeah. Yeah, no, but so admin keys are a big risk. And as far as I know, is Uniswap one of the only major projects right now that really doesn't have that key risk?
There's a few, and Uniswap is the best known. They're the most successful one.
Mhm.
They're the only one in the top 10 that is actually trustless, and trustless in that they don't have humans of any sort who can manipulate the core process of what they're doing. There are other ones. They're few and far between. Tornado Cash is is kind of like a tumbler for ETH and ETH tokens. That is, as far as I know, a trustless protocol. It doesn't have keys, can't be changed. It's immutable. It's
Mhm.
autonomous. It can't be stopped. As long as Ethereum lives, it will live. Right. There's a new project called Geyser that I've been following. That is the same thing. And when a project like that comes up, I get really interested, right? And they're usually the less exciting projects. Like the most exciting ones are the ones with, we can return 5,000% on your money because we have this super complicated smart contract with tons of risk, and it's psycho to put your money in, but you might get 5,000%. Like that stuff is fun for those people who want to gamble, but yeah, like those keyless projects are the ones that are less interesting, less exciting, less glamorous, but that's what I want. I
Yeah.
think those primitives we can build on top of those things and build a truly trustless thing here.
Yeah, that's what I'm most interested in is like, what's going to survive 3, 5, 10 years from now, right? Like what is really going to be the backbone? Not like how am I going to get rich quick in the short term? That'd be great, right? But like with that comes risk, right? There is no free lunch, especially in crypto. And I like your what was the term you used? Not aggressive, but being defensive in a way.
Adversarial thinking.
Adversarial thinking,
Yeah,
right?
yeah.
Yeah.
It's really, and I learned this from being around Bitcoin for years. It's you do not trust. You don't have to trust. The whole idea of an open blockchain like Bitcoin or Ethereum is that you should never be asked to trust that which you cannot verify, right? So if
Yep.
you can't look at it yourself with your own eyes and verify the information, um, or if you're not a developer, obviously you have to trust somebody who can look at a third party who can help you. But the whole idea here is trust should not be required for the safety of your funds. You should never have to trust the skill level of the developer. You should never have to trust the integrity of the developer. And most of these DeFi projects require that kind of trust. And also it extends to decentralized organizations like that have voting and stuff like that, like Compound and Maker and some of these other guys who have these tokenized voting systems. You still have to trust in the people who have all the tokens to make the right decisions. And to me, that's too much trust. And it's a lot closer to like shareholders and equities as we know them in traditional markets than it is to what I think trustless decentralized financial services should look like.
Yeah. Yeah, it's interesting. I saw a paper, I think it was from Andreessen Horowitz, where they were talking about like a model for like an evolution of a blockchain company where it's like it starts kind of centralized because you have to have control and you have to build, and then eventually it becomes more decentralized. Been,
Yep,
yeah.
I'm
What do you
familiar
think
with
of
it.
that?
Yeah, it's called progressive decentralization. That's the name they put on it. I believe that's the title of the post.
Okay.
And at first glance, it makes sense. Where they put out this idea that you have to start centralized and then slowly decentralize. People are going to, they say in the post, like people are going to criticize you for being centralized. They're going to criticize you for this and that. But and they say that means that they care enough that you can have a product, and then you should start to decentralize after that. And when I first read that, I realized, I thought like, okay, that makes sense. But then I started to think, you know, one thing I've learned from Bitcoin and others is that projects that start out centralized hardly ever move to decentralization. And the reason is it's not natural, especially if there's a company behind it and there's money behind it, because decentralization is messier, it's less efficient, it's harder, it's always less profitable. It's hardly ever more profitable.
Mm,
Um, so the Andreessen Horowitz thing is really targeted to startup founders who want to raise funding and who want to have a profitable company.
yeah.
It's not targeted to people who want to create truly trustless tools for the ecosystem. Uh, and that's been really difficult to do without this whole idea of like, hey, let's have a token and let's sell it and maybe it'll go to the moon. And then startup founders and VCs can take it to the bank and cash out, right? But
Yeah.
that's starting to change. And people are finding other ways to create. And that's why I was into this new project called Geyser, because they came up with an idea to create a trustless protocol and sort of be really transparent about the funding behind it. And so they have the token, but there's no key. They can't change it after the fact. And it's more and more of this transparency is going to come along. That's going to make these other projects that use that idea of progressive decentralization, it's going to make them look bad.
Yeah, I guess that's where the world is going, right? Like people are going to ask, well, why do you have an admin key or why is it centralized when you don't have to go that direction?
Yeah, yeah, and the biggest problem with that idea in general is, and we've seen this multiple times, we're seeing it right now, where you start out centralized, you don't put any caps on what your product can take in or do, or next thing you know, you've got one admin key or you got one centralized node that's controlling 300, 400, $500 million worth of crypto.
Yeah.
And so then you got people like me coming at you and saying, hey, so I noticed that you have like 3 team members that could come together and steal $400 million worth of crypto if they wanted to. Why should users have to trust you to not do that? And also, how do we know your private key is not laying on a coffee table and you're not using it as a beer coaster right now? You can't prove, of course, you're probably not doing that, but this is where adversarial thinking comes in. You have to think, what's the worst case scenario here? Because that worst case scenario has a slim chance of actually being true,
Yeah.
and
And
then you need to
we've
work.
seen it happen. I mean,
Right.
if you're in crypto long enough, you're going to get tainted to this shit. And that's why I think trustless is absolutely the right way to go, right?
Totally. There's one project right now. It's in the top 10 of DeFi projects on the DeFi Pulse website. It's called Harvest Finance. And on my blog, I had a post about this a few weeks ago. They have right now, I believe it's around $800 million worth of crypto in their DeFi smart contracts. And it turns out there's one admin key on an EOA, which is like an Ethereum, just a regular Ethereum address. It's not a smart contract. It could be on a Ledger Nano, it could be in MetaMask, whatever. So
Mm,
there's one key that can drain all of the funds, all of it. It has the capability of draining all of the funds or changing any part of the code to turn it into something malicious. That key is held by an anonymous individual who nobody knows who it is in an unknown jurisdiction somewhere in the world. um, have I said enough? Right? It's like
Jesus.
one person, unknown, is capable of draining the whole thing. And
Yeah.
half the time I say that, and people say, "Well, what could he do if they would just freeze the crypto?" And you wouldn't have. You don't have to take all 800 million at
Yeah.
once.
Yeah. It doesn't matter.
Just take a
It's
little bit here and
possible.
there.
Yeah.
It's like it's crazy, but people are continuing to trust it. And just that alone, that one use case to me. And by the way, this risk was fully disclosed in their audit report that they have on their own website. But when I tweeted about it, I guess it was about 3-4 weeks ago now, I tweeted about this when I read it in their audit report. The whole world was like, What? Nobody, even the people who put money in Harvest Finance, hadn't looked at that audit report and didn't know there was one key that could drain the whole thing. It was picked up on Cointelegraph and CoinDesk, and like all these websites are like, whoa, nobody had looked at it. So when people say, oh, it's audited, it's safe, no,
Yeah.
nobody's reading the audit reports. So it's like, what's the point?
Yeah.
You know, so it's the whole system is messed up. And
everybody hears do your own research, but nobody fucking does it.
that's right. I mean, that's the worst. The only reason I was looking at their audit reports is because I was thinking, hey, this is interesting. Maybe I should take a look at using this. Took me 3 minutes to look at the audit report, and I was like, no, the audit report itself says they can drain all the funds. It's not even in like gibberish or anything. It's right there, you know? So the fact that that was not seen by people that got it up to $1 billion in locked value, $1 billion. Imagine if imagine the press coverage, not just Ethereum, but CNBC, mainstream, if $1 billion worth of crypto gets lost in a DeFi project because some anonymous jerk pulls it out and just freezes it, holy smokes, nobody's looking at this. It's really scary.
And this is why I think the work you're doing is so important, because think about the implications. Like you said, like if something like that actually happened, $1 billion gets drained, the pressure on regulators to crack down on DeFi goes up exponentially, right? Like I'm all for innovation, but I hate when I see scams happen, obviously, because you don't want people to lose money, but like it has a lasting negative effect on the development of the space over time. So I think as many people as we can get to start raising red flags and go, look, this is the standard we need to operate by, the better for everybody that's in the space.
Yeah, totally agree. But like I said before, it's not as profitable to decentralize. And most of the DeFi projects that you hear about on a regular basis have large amounts of investor funding from venture capital firms, et cetera. So they're all being driven to generate a return on the investment of those organizations. And the way they're doing that is by maintaining some level of control over the project. You know, so even the ones that tokenize their governance and sign off, and we're not going to have an admin key anymore, we're giving power to the DAO, you know, and then the users are going to have these tokens that'll let them vote, you know, to make decisions about what changes with the project. The true story is most of those tokens are still sitting with the core team, with the investors, with the top level, you know, of people who have high financial interests in these projects. What do you think is going to happen if a regulator comes along and says, hey, the decentralized project is working outside of the scope of existing law. It needs to change in XYZ way. You don't think those 10 founders and investors could come together and vote some changes into, you know, that would meet the compliance? Of course they could. You know, and there's a lot, I say it's decentralization theater a lot of times because there's this curtain that nobody wants to look behind. That really is, it does come down to keeping a high level of profit, you know, having a strong exit strategy for founders and investors, you know, and really it's at this point, it's like a race to the finish line for founders, investors, et cetera, to do what they need to do and exit before regulators come along and try to force their hand. You know, and actually that would be a best case scenario for everybody, because then the big money guys would be out. Hopefully the tokens would get more fairly distributed to users. And if users actually if there really were thousands, tens of thousands of users that own the platform, as opposed to 5 core team members and 3 VCs, regulators would have a much harder time doing anything at all. Right? Because how can you get 10,000 people to vote in a certain way? It's an immutable smart contract on Ethereum. You can't change it without those tokens. So what do you do?
Yeah. It's such a strange thing because centralized exchanges like Coinbase and Kraken and stuff, and formerly BitMEX, I guess, they're just cash cows. They make so much damn money. So like I get the profit motive behind it, but I don't know. I've been thinking about my prediction for this, like in the coming years. I'm like, okay, well, what does this look like a few years from now? Does Uniswap or, you know, Binance's DEX or another one, do they take the lion's share of liquidity and trading volume, or is it a split? I don't know. Do you have an opinion on that?
It's to look years from now is still kind of hard for me because we're still
Yeah.
learning so much as we go along. Like we just saw this year, Uniswap is the king of the dexes on Ethereum, right? As far as like, it's a swapping tool, it's an automatic market maker. They came up with this functionality that allows you to swap without having order books. And so we're all like, wow, that's really amazing. So they build up, I think it was close to $1 billion in liquidity or over that. And then along comes this thing called Sushi Swap, which was another big story this year, which the entire story behind Sushi Swap was they said, hey, when liquidity providers deposit liquidity on Uniswap, they get a token, an LP token it's called. So if you deposit liquidity in the ETH USDC pool, maybe $2,000 worth or whatever, you get a token that represents your share of the pool. That's a transferable token. So SushiSwap came along and said, hey, why don't you deposit your liquidity token over in SushiSwap? So your liquidity is still in Uniswap, but you're giving the rights to your liquidity to SushiSwap. And then SushiSwap's going to pay you a higher rate of return. And by the way, we're going to pull your liquidity over into SushiSwap. And that was called a vampire attack, right? Because they're like they sucked like half the liquidity out of Uniswap in like a week.
Yeah.
So you start to see things like that and you start to think, what else could happen here? Like when you deposit in Compound, if you deposit $1,000, you get back a token that represents what you've deposited. What's stopping a new lending protocol from coming along saying, hey, deposit your Compound tokens over here. We're going to pull your money out of Compound. We're going to pay you twice the amount of interest. There's all these different things that we haven't even seen yet.
Yeah.
And it's just going to be this constant iteration of like trying to fight off the next thing that's going to result in something I feel like we can't even really envision yet.
Yep.
But I do think one thing that I do believe is I don't think that the profit motivations are going to go away for venture capital firms, for big investors that want to come in and make money with the actual product. I think that's going to be the biggest story and continued story. And it's going to look more like Silicon Valley fintech than it is going to look like Bitcoin. But I think there could be a parallel track where we have that stuff out there. If you don't mind trusting Silicon Valley guys, you can use that. But maybe we also have this parallel track where we have these trustless, keyless, decentralized things that work a little slower and they're a little uglier and a little less return on your investment, but they're trustless. You don't have to trust anybody at all. And that's what I would like to see. I would like to see that as the less popular option. You can have your fun with fintech if you want it.
Yeah. Yeah. I think just like everything in life, there's a middle path, right? So like you said, over here, we'll have the centralized stuff that mom and pop uses. That's, super, easy to use for lack of a better word. And then over here, it's like, if you want to be more experimental or anonymous, truly anonymous, you can take this path. And then I started thinking about, well, okay, how are governments going to respond to this? It seems like they're already terrified of Bitcoin in general and just this whole crypto movement because they're all coming out with their own central bank digital currencies. Are we about to go into a like truly like they're fighting you phase where they're trying to crack down on all the DeFi stuff? I don't know. Have you put much thought into that? Like,
yeah, I mean, here's the thing about DeFi, like the dirty little secret, is that a very, very large part of it is built on centralized assets, USDC, Tether, and other stable coins that are heavily regulated entities. That's probably the biggest vulnerability. And when I say built upon, it's not just using it to buy tokens or using it to swap for XYZ, but actually being used, for instance, as collateral for DAI, right? So there's centralized assets that are being used as the backing for decentralized crypto, for decentralized stable coins. You have huge pools of liquidity on all these different protocols that are paired up with USDC or paired up with Tether. And USDC, Tether, TrueUSD, any of these centralized stablecoin providers, I don't know actually what the name is for them, but they all have the ability to freeze any wallet. They could freeze any amount of tokens. They could say, hey, we don't like what's going on over here on Curve. We're going to freeze, $50 million worth of USDC and just completely screw the whole thing up. And that's probably one of the biggest things that could go wrong. Um, Outside of that, it's going to be a lot trickier for regulators to even wrap their head around what these projects are. They've already, I think just in the past month, Hester Pierce, who's one of the, I think CFTC or SEC, I forget which one she's with, but she was saying, we're looking at DeFi, but we don't even understand it yet. We can't wrap our head around it fully.
Yeah.
So there's a big learning curve. But there are major projects that are based in the US that are subject to US jurisdiction when it comes to those kind of regulations. So those are the instances I was talking about before, where they need to be sufficiently decentralized before that becomes a reality, or else there's going to be problems.
Yeah, they need to think ahead. Like, what are the regulators gonna want us to do now that they're gonna tell us they want 2 years from now? Like, you
Yeah.
almost have to anticipate that. Um, so for somebody coming into the space, like say it's somebody who's kind of familiar with Bitcoin, but they're like, what is all this shit? What is DeFi? What are DEXs? What's YAM? What's all this? Like, what advice would you give somebody to get in safely and to not get destroyed?
I would, first of all, come in and do not immediately abandon your Bitcoin mentality if you have one. As far as realizing that things that are usually too good to be true usually are,
Mhm.
and if you see a high yield, like a, over 100% return on your investment, odds are there's something going on there that you probably wouldn't approve of if you knew about it. So
Mm,
when you're first coming in, I suggest, start low. Don't use YAM, as your benchmark. Use your bank account as your benchmark. You're earning 0.1% there. Hey, go for 2%. Go for
yeah.
3%. Play around with Compound, play around with Aave, with things that are pretty trusted and pretty battle tested in the space. And see what, just wrap your head around it. Do a few swaps on Uniswap and see how that works and see how fast it is. Get
Yeah.
a sense for how it works. Look at the don't just do the transaction and walk away. Look at the transaction. Etherscan is a great tool that lets you look at the transaction and see what actually happened, because a lot of times there's things going on that you don't even realize, but once you start to see the routing for how this thing went, you start to wake up and you start to see the potential. So I would say
Mhm.
start small. Start with safer projects that have lower rates of return. Don't abandon your skepticism. And most importantly, is uh, keep your security at top of mind. Too many people, MetaMask is a tool that is a browser extension that a lot of these projects require. It's basically an Ethereum wallet in a browser extension, but its base setup uses a 12-word seed phrase that appears on your screen that could easily be seen by hackers, etc. This is a huge vulnerability for the space. Use a hardware wallet. You can use one with MetaMask. I have a video about that on YouTube.
We'll link
You
that
have
up. Yeah.
you have to be serious about this. This isn't like just fun and games, and you cannot trust anybody or anything in this space without doing some research. Ever, ever, ever.
Yeah. It's like if you want the riches, if you want to have the benefits of being your own bank and controlling your stuff, you actually have to step up and take responsibility for your own security, for control of your funds. And if you're willy-nilly with it, somebody's going to come and take it from you.
Yeah, it's the whole thing with Bitcoin, not your keys, not your Bitcoin, right?
Yep.
And that does extend into DeFi as well, but it gets a little bit trickier to wrap your head around when you're staking your money in a smart contract, but only your key can take the money back out of the smart contract. So, you see the money leave your wallet and go into this DeFi project, and it's sitting there, and you see it on the website, your balance, and it's going up with interest. You still have the only key that can access it, unless there's an admin key or some other tool that the developer coded in that allows them to access it. It might not be publicized. So, you can use trustless projects, send money out of your wallet, it's sitting there, and you still have the same level of security as you might with a Bitcoin key.
Yeah.
But there's also a chance that's not the case. And without doing your research, you just don't know. So that's the service I try to provide on Twitter and in my blog.
Yeah. So that was my next question is like, so somebody who comes in that's like, I want to do this, but I'm not technical. I'm not a developer. I don't really know how to read code. And like, I barely can get through Etherscan without tripping over myself. Like, how can somebody audit a project, or what things should they look for, or what resources can they use to help if something is truly trustless?
There are some great YouTube channels. I have a bunch of videos up there that most of them I did last year, but they're great sort of onboarding videos walking you through how to use some of the more popular projects and the safer ones, like I mentioned, not the super crazy APY projects, but the ones that'll earn you a small return on your investment. And those, like I said, it's a great way to learn is just going through that. And it does. I don't think that there's anybody watching this video who doesn't have the base technical knowledge to be able to look at an Etherscan transaction and understand it. And I
Hmm.
walk through that in a lot of my videos. And I'm not a developer either, but I have enough confidence and enough sort of persistence, I guess, to look at Etherscan, look at the audit report, skip the parts I don't understand, look for clues, try to just get my head around it. Because to be really, you can't be truly safe in this space until you have that confidence and that self-reliance that
Hmm.
allows you to not have to ask for help every single time.
Yeah.
So that's what I try to instill in people. So I would say start with my YouTube. There's some other good ones that I can send you afterwards if you like.
Cool.
I try to do this on Twitter, and there's some other great Twitter accounts too. But try to find voices that are that seem like skeptical ones. Don't trust anybody who all they do is shill, because
Yeah.
odds are, and it's same with crypto in general, right? You need to maintain a healthy dose of skepticism for everybody, including me.
Yeah, yeah, that's great advice. So whenever I look at this space, I see a few different, like, I like to compartmentalize. So we've got the dexes, so decentralized exchanges, which is, you're basically trading peer to peer. You're not going through a Coinbase or Binance or BitMEX or whatever. Then you've got the lending platforms, Compound, Aave, whatnot. How would you explain just that, like explain like I'm five? How does the lending piece of that work? Because I think that's where a lot of people get tripped up is they're like, what do you mean I can take this token and give it there? And I got this YAM thing. Like, what does all that mean? How would you distill that down into like its most basic form?
Its most basic form is you have a token. So let's say you have ETH. Let's say you have Ethereum, right? You have one ETH, and it's worth $450 today on the market. So you can take that, deposit it into Compound Finance, into their smart contract for ETH deposits. And they make this really simple with their website, right? You literally just go on their website, you click deposit one ETH, bam, you see it in there, and it starts to generate interest. That interest is being generated because your ETH is now sitting in a pool on Compound that other people can borrow from. Okay, so they can borrow from there, and when they do that, they're paying interest, and all that interest is divided up amongst everybody who's deposited slash lent their ETH. Okay, but then you're asking, well, how do I know they're going to pay it back? Okay, nobody can borrow from Compound Finance without having deposited first, and they have to deposit more than they're eligible to borrow. Okay, and if they don't pay back what they borrowed eventually, or if the price changes where all of a sudden what they borrowed is worth more than what they deposited, they get liquidated. Okay, and all of that stuff is happening on chain. So it's all provably happening. There's no mystery around it. It's all written in the smart contract that a developer could read and translate for you if you ask them to. But that's the core of how Compound works, Aave, and anybody who does like lending and borrowing. So the other projects like Harvest and Yam and Yearn and all this other stuff that's happening is building upon those protocols. It's building upon them because the thing about DeFi is it's permissionless, which means that you can build, and some of these projects do, they build their own projects. All they do is take 5 other different DeFi projects and mash them together in some weird way that produces some results that nobody was predicting. The next thing you
Yeah.
know, you have a brand new project, right? That's giving you this, 8,000% yield because they figured out, hey, if we do this on Compound, then send that over to Aave, and then send that over to DYDX and do this swap on Uniswap, all of a sudden you've got this crazy thing that's mutated with super high risk because there's all these different levels of things going on.
Yep.
But hey, we're going to get a higher yield out of it. And then you
Yeah.
bring in things like flash loans, which we didn't even talk about, but like, it's like you can all of a sudden borrow $50 million. And as long as you pay it back by the end of the transaction, you can use it however you want.
Yeah.
So that's where you're seeing all this crazy stuff that's happening. And that's like next level, but at its core, it's really not that complicated as far as how the lending and the borrowing goes.
Yeah. And I think all the, the gold rush of all the, I basically look at it as like arbitrage opportunities, right? Like I come from a trading background, and it's like, to me, it makes sense. It's like, yeah, you have these lending platforms, which are pretty simple, but then there's ways to like, kind of, for lack of a better word, hack the system to where you can find these arbitrage opportunities and create pathways that give you more alpha or more yield. But those don't last forever, right? Those get competed away over time. And in this case, it was relatively quickly for a lot of those projects. That's why I didn't rush into it. What do you see as, I guess, like on the financial services side, like other things that can come out of this that might be sustainable over the long run, like, insurance or, just different banking things? Is there anything that you see that could be a real possibility in the near future?
I think that the trading services are getting better and better. So, now we have derivatives developing, and we have options trading, and we have a lot of stuff that you can only do on centralized exchanges before. And now you can do it on Ethereum,
Hmm.
and it's developing in a way that is, it's becoming really useful, and it's becoming, it's attracting more and more people over. Ethereum's adding layer 2 solutions that's making these things faster and less expensive to use. So, with layer 2 solutions, like they call them ZK, zero knowledge rollups, right, which allow you to have these things execute, off chain on a side chain or whatever. That's where the technology starts to escape me a little bit, but I know that it's effective for making it cheaper and faster to use, because when you're trading 10x leverage, you need to have fast movements, right?
Yeah.
So you can't wait for an Ethereum block to be confirmed before that happens. So that's happening. Things like insurance, I'm not a fan of using blockchain where you don't need it, and I have a
Hmm.
lot of questions around insuring, like DeFi. There is DeFi insurance available, right? You can buy coverage in case the DeFi project you're using gets hacked or has a bug. But that exists, the insurance also exists on Ethereum in a smart contract. So
Yeah.
for me, as somebody who's kind of skeptical of all this stuff, I start to wonder, do I really want to trust this smart contract not to fail? Uh, to ensure this other one that might fail.
Yeah.
It's like so I start to think, why don't I have that off chain?
Yeah.
It's like,
Yeah. How does
so
the blockchain actually solve this problem? I saw there was a company today that just announced they raised just like 3 or 4 million bucks from VCs, and they were doing the insurance angle on DeFi. And I was like, is this really like a house of cards? Like what are the pieces, and like where are the risks, right?
right.
Kind of to your point about like being skeptical. It's like, okay, cool. Like there's a fine line between like innovation that's going to work and either just unnecessary stuff or stuff that's like just doomed to fail from the start. I don't know.
Yeah.
It's a constant question in my mind. And it feels like the more I read, the more confused I get.
Yeah. Yeah. I really believe that blockchain is good for two things. It's good for finances and it's good for identity. And I
Mm,
think that DeFi, as it matures, it's going to figure out how to start to meld those two things together. I think that the idea of having decentralized identity is like critical to a lot of this stuff working.
yeah.
And I think that once you start to bring this stuff together, and then also in a future world that I'm starting to be able to envision, let's say you have tokenized loans in the real world. Let's say you have tokenized mortgage, or you have tokenized car loans, or you know, it seems like it's probably just a matter of time at this point before banks, before governments start to realize that this is a really interesting way to transfer debt, or to, beyond just what you see on Ethereum.
Mhm.
So, there's so many uses for debt transfers and collateral in the real world, that it does seem like just a matter of time. The question is that going to happen on Ethereum, on an open chain, or is a lot of that going to happen on a closed chain or some other chain that doesn't require the open network of Ethereum?
Yeah.
And we see that, so we hear rumors of things happening with Ripple and things like that, and you start to wonder, how is this all going to go? So I think a lot of the ideas from DeFi, though, are going to be adopted um, by traditional finance, and I would not be surprised if in the next year or two we start to see traditional financial companies we've heard of, like big banks or brokerages or whatever, start to acquire or obtain some sort of interest in some of the DeFi projects that are growing at a really rapid clip, like Compound and some of the other ones.
Yeah. Yeah, I was talking with Carter Thomas about this the other day, just about how when you open up when you combine decentralized exchanges and prediction markets and the tokenization of everything, it opens up so much opportunity that we've never thought about before. It opens up new markets. I'm just super excited, and as like a trader, like money geek, like I, this is the most excited I've been about the crypto space since I got in like 8 years ago. Like it was like all Bitcoin and then like some early projects. I see and feel something happening right now that I think is going to make the next 5 to 10 years just super fun and interesting and profitable.
I agree. I think that to what you just said, the most underrated problem right now in all of crypto is the Oracle problem, and the idea of how do we get truth onto the blockchain without having to trust people to do it.
Yeah.
And a good example of this was with the election, the presidential election. There were a bunch of different voting markets, right? Like or prediction markets. You could go to Augur, Polymarket, all these. So I was playing around with the
FTX. Yeah.
Polymarket, which is on Ethereum, and basically the way it works, it's not just a bet, because I'm a big sports bettor too, right? You place your bet, you wait and see how it goes.
Yeah.
You can't, if you're betting on a UFC fight and your guy is losing in round 4, you can't do anything except sit there and pray, right? You can't
Yeah.
do
No
anything.
risk
Now,
management. Yeah.
yeah, but if you're doing it on some of these smart contract prediction markets, if your guy is losing in round 4, you can sell your bet. You can sell it for a lower price than what you bought it for,
Yeah.
right? But you can sell it. So, you have different ways. So all of a sudden, the information becomes the equity in a way, right? It's like you're trading information, you're trading ideas and thoughts and predictions.
Yeah.
And it really, like you said, it really opens up your mind to what else will we be able to trade. It's when you can trade thoughts and information, it changes the world. But again, what's your source of truth? Like the presidential election, it was like, who's going to win, Biden or Trump? It's still not settled, right? Because
Yeah.
actually, I don't know if they settled it or not. If they did, maybe people might be arguing it, because some people still think Trump has a shot. So it's where's your source of truth? That's the biggest and the hardest thing for crypto right now.
Yeah, that's a good point. And it was interesting seeing here, like I was just watching FTX and I don't even see the markets anymore. So maybe they settled and closed them, but it was wild to see how like when Trump was favored the night of the election, it was like his probabilities went way up. And then by the morning, it was just like completely reversed. And like to be able to actively trade those to me is so much fun.
Yeah,
Uh,
that's what I was doing on election night. I
yeah.
was like, I was trading the Trump's going to win votes, because at some point early in the night, like it went up to, he had like it went back up to 70% or something like that. I was like, boom, let's get rid of that. Let's sell
Nice.
that and see how it goes. Because even if he wins, I'm still coming out. I bought it at like 5 or 10% or something like that.
Oh,
So, and I
nice.
was playing with like $50,
Yeah.
So
Yeah.
IRS, if you're listening, I don't have any crypto, but yeah, it just, and I suggest to everybody, when you're playing with this kind of stuff, don't just look at what's right in front of you. Extrapolate it out. Like start to try to be a visionary on your own and think about what else could this apply to.
Yeah.
We're already betting on what's Bitcoin going to be in a year. We're betting on what's the temperature going to be tomorrow. It's like all this kind of crazy stuff. But what happens when that becomes its own marketplace? I think prediction markets are going to be a huge deal once we figure out oracles.
Yeah, prediction markets, tokenized assets of weird stuff from IP and ownership. I'm also really interested. I wanted to ask you about this is the NFT space, which that's a really broad umbrella, right? Non-fungible tokens can mean so many things from domain names to digital art to all this stuff. Like I know a lot of Bitcoin maximalists shit on that, but I actually see a lot of opportunity there. What do you think of the whole NFT thing?
I see tremendous opportunity. I think what a lot of Bitcoiners look at is the idea of things like art and things. And that's really one of the main uses right now is you get an NFT that represents some picture on a website that could be taken down tomorrow, right?
Yeah.
Which to me, I don't get it either. I don't understand why somebody would pay $1,000 for a JPEG on a website that's centrally hosted that could be taken down tomorrow, that
Yeah.
anybody could take a screenshot of, right? So people always make fun of that. But an NFT doesn't have to represent art or anything replicable, right? It could represent anything else, though. It could be tied to the VIN number on your car. It could be tied to, there's so many different things. Like you said, a domain name,
Hmm.
stuff that cannot be replicated and stuff that cannot be just viewed by anybody else. Um, that's the kind of thing that really opens up your mind that to realize we can tokenize anything at all if we can somehow create an unbreakable bond between the two things, between the NFT and the real world asset.
Yeah.
And again, and also it doesn't have to be a real world asset either. Like I could create one NFT right now, and whoever possesses that NFT is somebody. Okay, I'll have a phone call with you today, and then you send it to somebody else. Okay, I'll have a phone call with that person today, and I can just see who has it. I can get them to verify that, and I can just, so there's all sorts of things you could do.
Hmm.
But the most interesting thing to me is when you start to get into real world assets and you start to tie everything back to the uniqueness of the NFT, and you start to open up your mind to trading ownership of stuff that we use every single day right now.
Yeah. And I think some people underestimate the economy of like tradables, like Pokemon cards are making a massive comeback. And I've never really been into that. But recently there were some guys on YouTube, I think their channel is called Dumb Money, and they were going to try to purchase basically the most expensive unsealed pack of Pokemon cards ever. And I think the price they agreed on was like 375,000 bucks or something like that. And then it turns out that when they did this live stream, they brought the cards in and it looked legit. And then when they opened it, it was like, oh, this is a scam. Somebody swapped this shit out. It was like if you could somehow tie that to, an NFT token or whatever. It even I know, going from physical to digital, there's some challenges there, but that's a problem that I see that could be solvable. Also, like digital trading card games. Like I have some friends that tell me that they play some of these online games, and to be able to provably show scarcity of certain cards, and then like Decentralized stuff like that. I think there's huge opportunity there over the next few years.
You could be right. I have a hard time. I don't know if it's just like a factor of age or whatever, but like, as far as tradable like playing cards on, on Ethereum and stuff like that, um, it's hard for me to make the connection between the NFT, which is the token on the blockchain, completely unsexy, it's just like a thing, right, on the
Yeah,
chain, a piece of code,
yeah,
connecting that with a an image or something else or a song or something like that out in the world that anybody could access. But just because I have this token, I own it. um, to me, in playing cards too, like same thing, like anybody can kind of see it. um, to me, it's a very difficult thing to see tremendous value in,
hmm,
as opposed to if there was an NFT. the value to me has to be inherent to the actual NFT. So again, if the NFT contain the VIN number to a Bentley, and it's sitting outside, and I can say I own that Bentley because I have this NFT with this VIN number,
Yeah.
and it's sitting in my cold storage and nobody's touching it, right? And then if I want to sell it, I get the money and I send that NFT to you, and now you own it. And
Hmm.
now you can drive off, just like a car title. If you think
Yep.
about what we do with car titles today, you know, it's crazy that you can have a car title and just sign your name on the back and then somebody else can own the car. Like when you think about that, it's ridiculous, right?
Yeah.
As
Yeah.
opposed to a system that uses an NFT that it's immutable, where it has the VIN number, it has all the specs of the car in the NFT. Whoever possesses that owns the car. I know today it would probably be very difficult to do because nobody knows how to use crypto and people don't know how to be secure with their tokens. But you start to understand there is something there that could make NFTs really useful. A
Yeah.
non-fungible token is designed for ownership of something that is unique, and
Yeah.
so playing cards, yeah, but to me, it's like that's so much less interesting than a boat, or a
Yeah.
Bentley or something else that's unique and has a unique identifier of some sort.
Yeah, I think the easiest use cases are usually like evolutionary, not like revolutionary, meaning like you're not inventing some new thing. You're just bringing the next level of technology to that thing, like car titles. Like, yeah, why the hell? Like, I tried to sell a car one time and I couldn't find the car title. And then I had to jump through all these hoops to make it happen. Where if you have something that is verifiable and easier to track, maybe, unless again, you're not tight with security and stuff. Um, I don't know. Yeah, there are a lot of questions. There are a lot of problems to solve, but I'm excited about that space, and I'm constantly looking for opportunities. So anybody that's watching this, like if you know that space or have an opinion, tell me why I'm dead wrong, or tell me where you see opportunity. I'm still trying to learn this stuff myself, but I'm excited about it.
Yeah, totally. And by the way, I think with the idea of using NFTs in that way, like what we've been talking about does require um, trust outside of the blockchain, right? Because if you're going to match up an NFT with a VIN number, then you're trusting probably the DMV or somebody to have some sort of record of that.
Hmm.
Uh, but so I think that there's going to be mixtures of how we use the tech. Eventually, my hope is that we start to see like 100 layers of bureaucracy we have right now come down to 10. Right.
Mm,
And like, if it's like, if we can, we're never going to get it to zero if we live in a civil society like we do. I think
yeah,
it's still civil, but like, we can at least get it down by 50% or 80%. Like, you think about all the paperwork and all the stuff we have to do right now, just to get through our lives. I think that a lot of this stuff, including NFTs and some of the other tech we're working on, can really bring that down and create more efficient government and systems that we use on a day-to-day basis.
I agree, man. Every time I drive by a bank, I'm like, why is that still there? And like there's so many layers to different things, so much bloat, so many middlemen. It's just gonna get rocked up over the next few years.
It's crazy, right?
Yeah,
It's
man.
just changing fast.
Well, Chris, thanks for taking the time, man. I'm gonna pull up your website here real quick. Surviving DeFi is your Substack.
Thank you. Yeah, I just started it about 2 weeks ago, so I've been building up some good content. But I'm focused on putting the ideas we've been talking about into plain English for people, so that they can start to understand it and realize they don't have to be a developer in order to understand the space and manage their own risk.
Yeah. Yeah, awesome, man. Well, I'll link all this stuff up in the show notes, and yeah, I read through all your posts so far. It was great, and really good to connect with you. And looking forward to see where this takes us over the near future.
Thanks, man. Really appreciate you inviting me.
Yeah, appreciate it, man. Where can people find you outside of that? Twitter, Substack, anything else you want to link up?
Twitter, Substack, YouTube, youtube.com/Chris Blec,
Cool.
where I have a lot of videos about DeFi, and also I do a pretty regular live stream show where I invite projects on to determine whether or not their trust requirements are kind of up to snuff. So I recommend checking some of those out if you're interested.
Love it, man. I think we need more of this in the space, more transparency, more people holding projects accountable. And that it's just going to make everything better for all of us. So yeah, thanks for your work,
I
man.
agree. And I am seeing more and more of them every day. So I think we're getting there.
That's great.